Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report. I am Frank Ochoa, aka PivotBoss, with your analysis for the week starting January 19th, 2016. Here's a look at the daily time frame of the ES. You can see in overnight trading we've bounced so far here. This is overnight trading activity. 1861's a low here. Price rallying back toward the 1908s, which was just near the previous week's low price that we saw a big push to from 2 weeks ago. And now you see that the new low here came in off the CLVN, the composite low volume node here, which was our key level at 1846. Price bounced just shy of that level and bounced back up. One thing to keep in mind here is we're still seeing all rallies being offered, which means that these short bounces within the existing downtrend are typically fodder for bears to come in and defend and send prices to newer lows. So that's all that's been happening here so far. We've seen a down move, we've seen a bit of a bounce, it's been offered, we saw another bounce, it went offered, and now we're seeing another bounce in overnight trading. So this is a caution right here for any bulls looking to get long. Bulls need to be able to get above the 1890 key level and hold it. Right now we're 10, 11 handles above that zone. Being able to hold above 1890 rather short term would imply a potential pushback toward the recent highs at 1846 half. But again, keep in mind these bounces should be seen as selling opportunities. Failure to hold 1890 would suggest a resumption of the current trend into 1846 and below. If we take a look at the intraday time frame here, what you'll see is price when offered at 5-day VPOC at 1872 half has shifted up overnight VPOC to 1904 half. But if you zoom this thing out again, what you'll see is the existing downtrend again right here. This existing downtrend, you see all rotations into the top of the channel being offered to new lows. So that's what we're looking for again here. Here's 1890, the key level we're talking about. Look for bears to come in and defend somewhere between 1910 and 1913, somewhere in that zone, for a shot at seeing a reversal into 1846 in the bottom of this channel. All right, now taking a look at crude oil here. Here's crude oil in a daily time frame. Obviously, we've seen significant downside selling pressure. It's been no secret here. We've had it marked since here. Perfect reversal after failing to hold or see acceptance above the top of the range here at 52.47. That implied to us that we'd see a move into the bottom of the range at 40.69. That happened. Once price broke through that range, I mentioned all pullback should be selling opportunities within the downtrending market into key levels, which have all been tested and cleared. And the recent one being 28.91. That's been the one that we've been talking about needing to be reached. That is the 100% expansion target from the edge of this key range. So this range marks a certain number of points here, about 12, and this expansion to the downside marks exactly that number, about 12 points into 28.91. We had it from the top of the range, so we even had it farther. So we had about a 25-point call here in crude oil just since October. Fantastic, right into the bottom of the key range at 28.91. Now, very similar to the ES, all bounces in crude oil should still be seen as a selling opportunity. So short term, if we see any bounces in crude like what we're seeing now, expect bears to come in and defend for a continuation lower. While we have reached the 100% expansion target at 28.91, we do have additional new targets to play to. 25.96 and 23.02 are key targets to play to. In addition to that, we also have some new monthly and weekly expansion targets. So 27.21 would be the 100% monthly expansion target. So here's a few targets to play to. 27.21, 25.96, and 23.02 are the next key downside targets. Acceptance back above this 32 handle here opens the door again to a potential bounce that could get us as high as CV pocket 36.88. The intraday time frame for crude oil shows how price bounced off of the 28.91 key level, our big time target. Higher lows above that zone, that tells you there's been clean rejection of those price levels. If price can continue to hold above 28.91s, we could see a push into 5-day VPOC at 31.18, which is likely to be offered given the current downtrending price structure of the market at the time. All right, now taking a look at gold futures just briefly here. We continue to have that saucer bottom or rounded bottom here that's developing in gold. We have the bottom of the key range at 1077.90 and composite BPOC here at 1072. That's the zone I mentioned before that bulls want to continue to defend for a shot at squeezing this thing higher into 1123.80 and 1130. Failure to hold above 1072s would suggest a retest of recent lows with a shot at seeing further downside price discovery. Lastly, let's take a look at the NQ. The NQ here in a daily time frame shows prices are bouncing in overnight trading, very similar to the ES, but they are bouncing within the existing structure of a downtrending market. When prices are going down, all of these little rips right here should be seen as selling opportunities for new lows. That's what this could be. So we're coming into 42.26, which is a very important key level here, and a CLVN. That's an area where bears want to defend. 42.26 for a shot at seeing a continuation into the primary bear target for the week and the secondary bear target for the week, which is 40.72 and 40.14. So we could be looking at further overall weakness into 38.93.5, which is the bottom of the major range here. In the days or weeks ahead, bulls will need to reclaim prices above 42.26. Reclaiming acceptance above that zone could give us a bounce back into 44.49, which would likely be defended by bears for another shot at weakness. So right now the bears maintain control unless bulls can reclaim some of these key levels, 42.26 being the first. Now intraday speaking here, you can see the downtrending market that we've had in effect. This downtrending channel has been in effect, and it also goes backwards as well. Expect a move into 42.26 and 42.37, the top of 5-day value, to be defended by bears for a shot at seeing a bottom move to the bottom of the channel. Any acceptance again above 42.26 would open up a move back to 43.65 and beyond. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.